What is going on, YouTube? Welcome to the Living Freed channel. My name is Tyler Freed, and today I am in Kentucky. I am about to hit Louisville, Kentucky. I got a load out of Albany, Georgia, out of Molson Coors Brewery, and I'm headed up to a town just south of South Bend, Indiana. So that's the run I am on right now. I got that load yesterday, and I am about 300 miles away from where I'm delivering, so not really a long day today. I have to wait till the morning to deliver, and so that's pretty much it. I just wanted to kind of let you know what you're looking at, what you're seeing, and what's going on with me. Nothing new, just been trucking, basically, and that's what I do pretty much every single day is I'm driving, and that's what we do as over-the-road truckers. So anyway, if you're new to the channel, once again, my name is Tyler Freed. I would really appreciate it if you would like the video, subscribe to the channel, and also stay tuned until the end of this video, because I'm going to be talking about a subject that I have a lot of passion for, and so that's pretty much it. So thank you for watching. If you are new to the channel, please stay tuned till the end, like I said. So let me get right into the topic of this video. I'm going to make it short, sweet, and to the point. I'm going to talk about what I believe is the difference between an asset and a liability. What is an asset? What is a liability? How do you define that? And I'm going to give my definition of an asset and my definition of liability. Now, in basic accounting principles, it's going to be a little bit different in like actual accounting principles and my definition. Those two things are going to be a little bit different, right? So in basic accounting, basically what an asset is something that has value, right? So technically a car could be an asset. However, you know, a car goes down in value, but it is valuable. Like, you can sell a car for money even if you buy it at $30,000, but, you know, 3 years later, 4 years later, it goes down to $10,000 in value, right? You know, but it's still technically an asset because it still has value. You can still trade it in for cash, right? But that's basic accounting, you know, that's just basic accounting. Anything that has value. A house would be technically an asset also. It would be on a balance sheet, it would be put under the asset column. That's what it would be. It holds its value. Usually, you know, property holds its value or goes up in value over time. However, you know, I know a lot of people have read this book, and the book is Rich Dad, Poor Dad. And I'm going to give the definition in that book of what an asset truly is, right? And it's a basic definition, and I think a lot of people misunderstand this definition of what an asset really is. And in the book, Rich Dad, Poor Dad, you know, he defines an asset being something that puts money in your pocket, and a liability being something that takes money out of your pocket. Okay? So, in the book, he does talk about how your house is not an asset, it's actually a liability, right? And when it comes to basic accounting, you know, that's not really true. Your house really is an asset. It would be listed under the asset column. But with his definition of, does it put money in your pocket or does it take money from your pocket? That's the definition you have to go by, or we have to go by the same definition basically of what an asset really is. I firmly believe that he is absolutely right. I think a house that you live in is definitely a liability, and I believe that to be true, even though, yes, houses do go up in value over time. I still liability. Why? Because a house that I live in does not produce a positive cash flow over time. I have to pay money out of pocket, out of my work, sweat equity, out of my hard work, out of my time spent at my job. I have to pay for everything associated with that property. I have to pay for the mortgage and insurance, mortgage, insurance, maintenance, all those things add up over time. And honestly, all those expenses add up over time, and really they really exceed the appreciation that you got over that period of time of owning that house. Typically, that's what happens, right? So, and you're having to funnel money out of your job or business you own or whatever, your earned income, and pay for this house to live in. Now, in the book, he's not saying don't own a house. I'm not saying don't own a house. I think home ownership is something that everybody should strive to achieve in their life. Absolutely. It's good to have home ownership, especially pay off your house and own it, because it lowers your expenses. It lowers your living costs. So it really is a good thing, but it's not really an asset if we define an asset as something that puts money in your pocket. Now, could that house become an asset? Yes, it could become an asset. If you rent that house out and you have positive cash flow every month, then it would be an asset. So, for example, let's say all the expenses associated with the house, right? Your mortgage, your taxes, your insurance, your maintenance over time, right? Let's say all of that adds up to $1,500 a month, and you rent it out for $2,000 a month, and you have $500 positive cash flow at the end of every month. That would be considered an asset, because even if you had a mortgage and you're borrowing money for that house, if it has a positive cash flow, it's still an asset, because you're not having to pay to keep this asset. You're not having to pay for all the maintenance, and taxes, insurance, mortgage. You're not having to pay for that. So it is an asset by Robert Kiyosaki's definition of an asset puts money in your pocket. A liability takes money from your pocket. Whereas, what if I was living in that same house and it was $1,500 a month for all the expenses and mortgage and everything, and I'm having to pay out that $1,500 out of my income? That's where it becomes a liability. Why is it a liability? Because, and this is why I really think it is a liability, because what if I lose my job and I am unable to cover all of the expenses associated with that house? What if I'm unable to pay my mortgage? Well, then, and I can't find a job like I had. Guess what? I might lose that house. It might go into foreclosure. But if I can keep a tenant in that house and it produces some positive cash flow, and I'm leveraging somebody else's time and money to own that asset, then I have an advantage. I have an advantage. I have a better chance of holding that asset than I do paying for it out of my own income. Use somebody else's income, right? Use other people's money to own assets. Use other people's time to build and grow your wealth. And that's really kind of the definition of an asset and a liability. And in my opinion, that's true. I do not think a house is an asset if you're paying for it. I do not think that a lot of things people call assets are assets. I do not think just owning a stock is really an asset. I really think, like, if you own a stock and it goes down in value from the time you bought it. Let's say you bought a stock for $10 and it went down in value 30% and it goes down to $7. Is that stock a asset? No, it's not an asset. It is actually a liability because it's losing you money. But if you bought that stock for $10 and it goes up 30% to $13, then and you sold it and made $3 on it, that would be an asset. But it really technically wouldn't be an asset until you sell the stock, until you realize that gain, because it actually put money in your pocket. It's not an asset until you sell anyway. But if it has a dividend, let's say you bought a stock for $10 and it pays you a 3% dividend, and you're earning cash flow, you're earning an income through dividends, and also the stock appreciates over time, it goes up in value, that would be an asset as well, because it is putting money in your pocket while you hold on to this asset that could possibly go up in value over time, right? So that's the definition of an asset, plain and simple. Puts money in your pocket. Liabilities take money from your pocket. So if you're somebody trying to build wealth, right, you want to try to own as many assets as possible and as many liabilities, or as little liabilities as possible. You want to own assets, not own liabilities, right? You want to invest money, put your money into things that go up in value, that produce a cash flow over time. That will build wealth, not cars and houses and, and fancy clothes and things like that. That's not wealth. That's flash. That's not real wealth. Real wealth is ownership of assets, acquiring assets. And, for somebody that is 27 years old, I have started purchasing assets at a very young age. I've started learning and educating myself about all the different asset classes that there are and studying that so that I know what I'm doing when I invest money into a certain asset class, right? I want to know what I'm doing. And that's really where it begins, is a financial education and understanding, the difference between assets and liabilities. That's a basic thing for people who have that education already, but the majority of people, honestly, don't know that. They do not know the difference between assets and liabilities. They don't even know, right? They think their house is an asset. They think their car is an asset. They think, those are not really assets by the definition of assets put money in your pocket, liabilities take money from your pocket. So just because it holds a value doesn't mean that it's actually an asset. And, that's something that when I learned that, I'm like, okay, I've changed my mind on what I used to think was an asset, I used to think just ownership of anything is an asset. No, you need to find a cash flow producing asset, something that actually pays you while you hold on to it and hope that it appreciates over time, right? So that's pretty much it. I just wanted to make a quick video about that because, on my channel, I like to talk about, financial education, financial topics. That is a passion of mine. So while this is kind of a trucking channel, it's also kind of a personal finance channel. I'm going to be talking about what, things that I'm interested in, things that I believe in, that I think will help people, that I think, is really important for people to know, basically. And yeah, that's pretty much it for this video. I just wanted to drop another video and talk about something that I believe people should have a concept about, a nice understanding about. And, if you're somebody really trying to change your financial situation, I recommend reading the book Rich Dad Poor Dad. It's one of the best books ever written on personal finance, and learning the difference between assets and liabilities, starting to improve your financial education. And I think that's what every single American needs to do. Personally, I know that not everybody is going to do that, but this video is for people who want to do that. Okay? And if somebody like me who just drives a truck for a living can, do something about their financial future, who can about things that you would have to go and get a master's degree to learn, really, if you really wanted to learn a lot of these things. It's really not that expensive if you just go, buy an Amazon Kindle and order books online and read every single week. You could read one book on finance, one book on business, one book on the stock market, real estate, things like that. Educate yourself. That's what this channel is all about, is self-improvement, educating yourself and working hard and building a future. That's what it's all about. I'm talking about what I do. I do not talk about anything that I don't do myself, or I don't believe in doing myself. I'm not gonna, and I'm not telling anybody what to do. I'm just sharing what I do and what I think. And if you have a disagreement, please leave it in the comment section below. Maybe I can learn something from what you have to say, right? But I firmly believe, I don't think a house is an asset. A lot of people would disagree with that. I think a house is an asset if it's cash flow positive. I do think that. And you're not having to pay for it, then it's an asset. If you're having to pay for something out of your own income, it is not an asset by the definition given in the book Rich Dad, Poor Dad. So that's it for this video. If you like the video, once again, please like the video, subscribe to the channel for more content in the future. God bless. Have a wonderful day. Peace out.